Well, Faraday Future, one of the companies that Palantir invested in through its SPAC investment strategy, is in some hot water, and this is not good for Faraday Future, and it's certainly not good for Palantir. Back in August 2021, Palantir invested $25 million in Faraday Futures through a SPAC deal, and Faraday Futures is an EV company. And as part of the deal, Faraday Future agreed to use Palantir Foundry, giving Palantir access to yet another up-and-coming company that might generate a significant amount of data. But as of just a couple hours ago, everything has gone sour with this deal. The chair of the company, Faraday Future, is stepping down over allegations of improper accounting. Essentially, they inflated the number of pre-orders for their electric vehicles, and obviously this is fraud. So the report says that the chairman is stepping down after an internal investigation found that the electric vehicle startup has misled investors about pre-orders. Before the company merged with the special purpose acquisition company last year, they claimed to have over 14,000 reservations for their FF91, which is their model of an electric vehicle, but apparently only several hundred of those were actually paid, while the rest were simply indications of interest. So the company's appointed an interim CEO from the board of directors and have also sent the vice president of global capital markets to be suspended without pay. Now, obviously, this is pretty much a worst case scenario for Palantir's SPAC investing strategy. There's a lot of different pros and cons of what they've been trying to do with these SPACs, and I've actually detailed those in my full-length bull and bear case videos for Palantir, which I'll link in the description box below if you want to check those out. But essentially, this is the worst possible case scenario. The idea with these SPACs is to invest in up-and-coming companies that have outsized potential and that are in interesting industries where Palantir is trying to get a foothold. Palantir has poured hundreds of million dollars into, I think, 14 different companies with the SPAC investing strategy, and it's lucky that this was only a $25 million investment, because with the way things are working out, I would kind of not be surprised if this went the way of Nikola Motors and the company that they've invested in end up really just crashing and burning. So this is potentially $25 million that's been set on fire and that won't ever be coming back. And I know there's going to be some Palantir bears that point to this and suggest that the SPAC investing strategy was never a good idea. And maybe they're right, but still, there's a number of different companies in the portfolio. So I think it remains to be seen whether or not the total overall strategy will actually pan out. Obviously, like I said, this is pretty much a worst case scenario, but you never know. Maybe one of the other 14 companies ends up becoming the next tech unicorn in whatever sector that they're in, and then that could offset any of the potential losses of situations like this. In the end though, I think there's really no way to spin this positively. I think this is a pretty big L for Palantir. I'll be curious to see if this affects the stock price in pre-market and then as markets open tomorrow. And we'll see what happens over the next few days as more information comes to light. Heading into the Q4 earnings report in just under 2 weeks, this is not a great thing to have happen, but it is what it is, and we move on. Overall, I'm still a Palantir bull, and this hasn't affected my fundamental thesis about the company, but it's not good news.